Let's start with a truth most people aren't ready to hear. 90% of traders don't lose because they're stupid. They lose because their mind was never built to handle money. It'd bother you. Because if failure were about strategy, indicators, or entries, most people would eventually win. Strategies are everywhere, is flooded with them. Courses, PDFs, Discords. If information made people rich, we'd be surrounded by millionaires. But we're not. Ask yourself this uncomfortable question. If the strategy is the same, why do the results look so different? Here's the brutal answer: no one markets. The market doesn't punish bad strategies, it punishes weak psychology. The moment real money is on the line, your brain changes. Logic disappears. You hesitate. You chase. You overtrade. You revenge trade. You break rules you swore you'd follow. And suddenly the problem isn't the chart, it's you. This is where most retail traders die quietly. Retail traders think like consumers. They want certainty, comfort, fast rewards. They want to feel right. Wall Street elites think like operators. They expect uncertainty, risk. They don't care about being right. They care about positioning over time. That difference alone decides who dominates and who disappears. Retail traders ask, trade going to win? Professionals ask, is this decision statistically aligned with my edge, regardless of outcome? One mindset is emotional. The other is surgical, and here's where fear, greed, and ego start silently draining accounts. Fear makes you cut winners early and let losers breathe. Greed makes you oversize, chase, and abandon patience. Ego makes you need to be right instead of disciplined. None of these show up on a chart, but they control every click you make. Why two traders can take the exact same setup, one compounds wealth, the other blows the account. Same market, same strategy, different mind. And here's the most dangerous illusion of all: most traders think they're rational until pressure exposes them. The market doesn't test your knowledge, it tests your identity. It forces you to confront how you handle loss, uncertainty, delayed gratification, and boredom. Things no indicator prepares you for. By the end of this video, something will shift. You'll stop chasing money. You'll stop blaming capital. You'll stop confusing activity with progress. You'll start seeing money not as something to win, but something to manage without emotion. And once that clicks, everything changes. By the end, you'll never look at money the same way again. Here's the part no one talks about, because it hits too close to home. Most people were never conditioned to handle money, let alone grow it under pressure. From childhood, money was emotional, not strategic, not neutral. You were taught that money equals safety, that losing money equals danger, that mistakes with money mean failure, shame, or punishment. Think about it. Don't waste money, but be careful, but play it safe. Well, what if you lose it all? None of this trains decision makers. It trains fear-based protectors, and that wiring follows you straight into the markets. Here's the brutal truth. The human brain is perfectly designed to survive, and absolutely terrible at trading. Your brain evolved to avoid pain, seek comfort, and react fast to threats. Markets demand the opposite. They reward patience. Delayed gratification, emotional neutrality under uncertainty. That's why most people lose. Not because they're dumb, but because they're running survival software in a wealth environment. Your survival brain doesn't care about long-term expectancy. It cares about right now. So when price goes against you, your nervous system panics. When you're in profit, it begs you to secure safety. When you miss a move, it screams, don't be left behind. This isn't weakness, it's biology. But biology doesn't pay profits. A massive gap between the survival brain and the millionaire brain. The survival brain asks, can I avoid pain? What if this goes wrong? The millionaire brain asks, what is the cost of not acting? What is the probability over time? What decision aligns with my system, not my emotions? One avoids discomfort. The other uses discomfort as data. And this is where comfort seeking destroys accounts. Most people design their lives and their trading to feel good. They want reassurance, certainty. They want quick feedback. But markets don't reward comfort. They charge interest on it. Comfort makes you hesitate on valid setups. Comfort makes you close trades early. Comfort makes you avoid journaling, reviewing, and facing mistakes. Comfort feels harmless until you calculate the cost. Missed winners, unrealized potential, years of stagnation. And here's another illusion people cling to. If I'm smart enough, I'll figure it out. Intelligence does not equal profitability. Some of the smartest people lose the most money. Why? Because intelligence feeds overthinking, not execution. It creates complex justifications for emotional decisions, turns fear into logic and ego into analysis. Markets don't pay you for IQ. They pay you for behavior under pressure. Simple system executed flawlessly beats a genius strategy executed emotionally every single time. Now let's talk about pain. Humans are wired to avoid pain immediately, even if it costs them later. Markets demand the opposite: short-term pain for long-term gain, holding through drawdown, letting profits run. Accepting losses without revenge. Actions feel wrong to the survival brain. So most traders choose relief over results. They exit early. They skip trades. They interfere. And then they wonder why consistency never comes. Because profit requires controlled discomfort, not chaos, not recklessness, but the willingness to feel uneasy without reacting. This is the real divide, not rich vs poor, not lucky vs unlucky, but those who obey their emotions, and those who train their mind to override them. And here's the shift: most people never make money is not emotional. You are. Money doesn't care about your fear, your past, or your effort. It responds to structure, discipline, and repeatable behavior. And once you understand that, once you stop trying to feel safe and start trying to operate correctly, you're ready for the next level. Now let me show you how elites think differently, something the top 1% of traders understand early, and the rest spend years chasing without realizing it. The real edge isn't on the screen. It's inside the operator. Is why elite traders obsess over psychology, not as motivation, not as hype, but as infrastructure. Because when pressure hits, strategy collapses without internal control. Wall Street doesn't advertise this part. Not because it's secret, but because it's unsexy, slow, and brutally honest. Here's the truth: external strategies don't fail. Rules do. Most traders build systems for the market, but none for themselves. They define entries, exits, risk models, leave decision-making to emotion when money is on the line. Elite traders do the opposite. They obsess over how they think, not just what they trade. Know that under pressure, the brain defaults to habit. So they don't rely on willpower. They rely on predefined internal rules. Rules like, when I feel urgency, down; when I feel fear, I reduce size; not clarity, when I feel overconfident, I stop trading. These aren't market rules. They're self-governance protocols. Pressure doesn't create mistakes, it reveals them. Decision-making under pressure is where accounts are won or destroyed. In calm conditions, everyone looks disciplined. Anyone can follow rules when nothing is at stake. But when price moves fast, when drawdown hits, when a big win inflates the ego, that's when clarity separates professionals from amateurs. Traders don't try to eliminate emotion. They understand that's impossible. Instead, they build systems that function despite emotion. They assume fear will show up. They assume greed will whisper. They assume doubt will interfere. So they design execution that doesn't require confidence, only obedience. This is mental clarity in chaos. Clear actions. Most retail traders wait to feel clear before acting. Elites act clearly even when emotions are loud. This leads to one of the most misunderstood concepts in trading: risk perception vs. risk reality. The market doesn't care how risky something feels. It only responds to probability and position size. A trade can feel terrifying and be statistically sound. A trade can feel safe and be completely reckless. Retail traders trade based on emotional risk. How uncomfortable am I right now? Elite trade based on quantified risk. How much am I exposed, and does this align with my edge? That's why amateurs panic on small losses and professionals stay composed during volatility. One is reacting to feelings, the other is responding to numbers. And this is where silence comes in. You'll notice something strange about elite environments: they're quiet. No hype, constant stimulation, no emotional noise. Silence isn't emptiness, it's signal clarity. Top traders protect their mental bandwidth aggressively. They limit inputs, follow routines. They repeat the same process day after day. Not because they're robotic, but because consistency breeds predictable behavior. Predictable behavior compounds. Routines aren't boring to elites, they're stabilizers. Same preparation, same review process, same risk framework. Chaos outside requires structure inside. And at the center of all this is the concept most traders never reach: detached execution. Detached execution doesn't mean you don't care. It means you don't identify with outcomes. A win doesn't inflate you. A loss doesn't define you. You execute. You record. No emotional stories, no self-judgment, no revenge, just data. This is where true authority comes from. Not confidence, not aggression, but neutrality. Detached execution allows you to let winners run without interference, accept losses without emotional damage, follow your plan without negotiation. It turns trading from an emotional experience into a professional operation. And here's the paradox: most people miss detachment doesn't reduce performance. It unlocks it. Because once you stop needing validation from the market, stop forcing outcomes, You stop chasing, you stop reacting, you start executing. This is the inner game Wall Street never teaches openly. It can't be sold as a shortcut. It must be trained, reinforced, earned. And once this internal structure is built, strategy finally works the way it was supposed to. Now, the operator is stable. And in the next section, you'll see how this internal mastery turns into real, repeatable consistency. This is where everything becomes uncomfortable. Now we're not talking about markets anymore. We're talking about identity. Not income level, not account size, but the internal voice that shows up when things don't go your way. Here's the truth most people avoid. Broke thinking isn't about money. It's about reaction. You can have a big account and still think broke. You can have a small account and think like an operator. Broke thinking sounds familiar. It says, shouldn't be happening. I can't afford this loss. I need to make it back. I was right. Why did the market do that? Notice the pattern. Everything is personal. Every loss feels like an attack. Every trade is a verdict on self-worth. So behavior follows. You oversize because you need the win. You interfere because you can't tolerate uncertainty. You chase because missing out hurts more than losing. Broke thinking is emotional math. It measures success in feelings. Now watch how millionaire thinking handles the same moment. A loss happens. There's no shock, no panic, no identity crisis. Just a question, was this loss within the rules? If yes, move on. If no, adjust behavior. That's it. No drama, no story, no revenge. Because millionaire thinking doesn't react to losses, processes them. This is the core divide: emotional mindset versus statistical mindset. Emotional thinkers experience every trade as a unique event. Statistical thinkers see trades as samples in a long series. One trade means nothing. 100 trades mean everything. That shift alone changes how you feel pain. Emotional thinkers feel loss immediately and intensely. Statistical thinkers distribute pain across time. They understand something most never internalize. You don't get paid for winning trades. You get paid for positive expectancy over repetition, which leads to the next addiction most traders don't realize they have, termed dopamine. Wins feel good. Being right feels even better. So broke thinking chases excitement. Big size, fast moves, high stimulation. But dopamine is expensive, costs discipline, it costs patience, it costs consistency. Millionaire thinking rejects this trade-off. Elites are bored on purpose. They don't want adrenaline. They want equity curves that move quietly upward. They know excitement is the enemy of longevity. That's why they'll take the same setup, same risk, same execution, over and over without needing novelty. Because boring consistency compounds. Broke thinking obsesses over being right. Look, I knew this would happen. I was early. But the market doesn't reward predictions. It rewards position management. Millionaire thinking asks a different question. Did this make money over time? You can be right and still lose. You can be wrong and still profit. That realization alone breaks most egos, because it forces a hard reframe: accuracy is irrelevant without discipline. Elites don't need to prove intelligence. They need to protect capital. And this is where the hardest mental reframe lands. Losses are data, not failure, not punishment. Not a sign you're behind. Data. Each loss tells you something about your edge, about your execution, about your psychology. When you treat losses as data, emotion loses leverage. You start asking, what does this teach? Broke thinking avoids this reflection. It numbs, distracts, or reacts. Millionaire thinking reviews. Not with shame, curiosity. Because progress doesn't come from winning, it comes from calibrating behavior. This is why elites love journaling, statistics, and review, not because they enjoy paperwork, but because feedback accelerates mastery. They don't need motivation, they need clarity. And clarity comes from evidence. Here's the identity shift that changes everything. You are not the result of your last trade. You are the result of your process over time. Once that sinks in, pressure fades, forcing outcomes. You stop chasing validation, you start executing cleanly. And when execution becomes boring, when losses become neutral, when patience feels natural, you're no longer thinking like someone trying to get rich. You're thinking like someone who already understands money. And that's the mindset that quietly wins while everyone else stays loud. If you strip trading down to its core, all the indicators, setups, and strategies, you're left with one brutal truth. The market doesn't beat you. Your emotions do. Every blown account has the same invisible cause. Not lack of intelligence, not bad strategy. Uncontrolled emotion at the moment of execution. Let's break this down. This is where most traders finally feel seen. Fear, how it hijacks execution. Fear doesn't show up screaming. It whispers. It tells you to wait just one more candle, convinces you to cut winners early. It makes you reduce size on good setups and increase it on bad ones. Fear disguises itself as caution. But real fear isn't about risk, about uncertainty you haven't learned to tolerate. The moment money is on the line, your nervous system goes into protection mode. Your body reacts before your logic does. Fear causes hesitation, not discipline. Pros don't eliminate fear, they factor it in. They assume fear will appear and design rules that execute anyway. Greed. Why winners don't overtrade greed isn't wanting more money. It's wanting money now. It shows up after wins. It convinces you that you're on sync with the market, pushes you to take subpar setups because confidence feels good. This is why most traders give back their best days. Greed shortens patience. It erodes standards. Elite traders do the opposite after wins. They slow down, they reduce activity, they protect clarity, because they understand something most don't. Goal isn't to make money today. The goal is to be able to trade tomorrow. That's why winners don't overtrade. They know momentum is emotional, not statistical. Ego, destroyer ego, is the most dangerous emotion in trading because it pretends to be strength. Ego needs to be right. Ego defends bad decisions. Ego refuses to exit when the market invalidates the idea. Ego turns a small loss into a large one. You'll hear ego say, "Come back. I can't be wrong here." The market is irrational. Pros hear that voice and flatten the position because they know the market doesn't negotiate with identity. Ego trades to protect self-image. Professionals trade to protect capital. Revenge trading. Set collapse revenge trading isn't about anger. It's about emotional imbalance. A loss creates tension. Your brain wants relief. The fastest relief feels like another trade. So you abandon your system, not to win, but to feel normal again. This is the most expensive therapy session in the world. Elite traders recognize this state immediately. And they do something radical. They stop. They walk away. They shut down the platform. They protect the account from themselves. Because emotional recovery matters more than immediate opportunity. Emotional detachment techniques used by pros professionals don't rely on motivation. They rely on structure. Some of their most powerful techniques are surprisingly simple: predefined risk per trade, no negotiations, hard daily loss limits, decision-making ends automatically, checklist before execution. Emotion doesn't decide, the journaling not outcomes, but behavior. They don't ask, "How do I feel?" They ask, "I follow the process." This creates emotional distance between self and results. Why elites don't celebrate wins or mourn losses? This confuses most people. Why wouldn't you celebrate success? Because celebration creates attachment, and attachment creates interference. A big win raises expectations. A big loss damages confidence, decision-making. Elite traders aim for emotional flatness, not numbness, neutrality. Wins are expected. Losses are expected. Neither deserves emotional weight. Like a factory doesn't celebrate every unit produced, it measures output over time. Mental neutrality explained simply: mental neutrality means this: you do your job, regardless of outcome. You don't feel high after wins. You don't feel broken after losses. You remain operational. This is what allows consistency, is what creates longevity, and this is what most people never train. Emotional control isn't suppression. It's non-identification. You are not your P&L. You are the operator executing a system. Once that clicks, trading stops feeling personal. And when it stops feeling personal, it finally starts working. The real edge was never speed, intelligence, or prediction. It was the ability to stay emotionally neutral while everyone else reacts. And in the final section, you'll see how this neutrality turns into a repeatable, professional framework that compounds quietly over time. At this level, motivation is irrelevant. If you still need to feel inspired to trade, well, you're not operating, you're hoping. Top traders understand something early that most people never fully accept. Beats motivation every time. Motivation is emotional. It comes and goes. It depends on mood, results, confidence. Discipline is mechanical. It shows up regardless. Don't reward how you feel today. They reward what you do consistently. That's why elite traders don't build systems around emotions. They build them around routines and non-negotiable rules. Because when pressure rises, thinking drops. Only habits remain. Daily mental routines of top traders. Before the market ever opens, professionals are already ahead, not because they're predicting anything, but because they're mentally calibrated. Their routine is boring. And that's the point. They don't scroll. They don't chase news. They don't hype themselves up. 3 things: check internal state. Am I calm, tired, frustrated, overconfident? Not to judge, just to be aware. Reaffirm rules: risk per trade. Max loss, conditions for entry. Accept uncertainty. They remind themselves, anything can happen today, and I don't need to control it. This market mental preparation removes the illusion of control. Control is gone, execution improves. Pre-market mental preparation, setting the frame. Elite traders don't enter the market asking, how much can I make today? They ask, how do I protect my decision-making today? Because clarity is the real capital. They visualize execution, not outcomes. They mentally rehearse following rules under pressure. Why? Because the brain performs what it's already practiced. They don't wait for discipline in the moment, they install it beforehand. Post-trade emotional reviewed, where growth actually happens. Most traders review charts. Professionals review behavior. After the session, elites ask, did I follow my rules? Or where did emotion interfere? Or what patterns showed up internally? They don't obsess over profit and loss. They track decision quality. P&L lies in the short term. Behavior doesn't. This post-trade emotional review turns mistakes into data, not guilt. And that's how discipline compounds. Rule-based living, not feeling-based decisions. Here's a hard truth. If your actions change based on how you feel, you don't have a system, you have impulses. Elite traders remove choice. Risk is fixed. Entries are defined. Loss limits are enforced automatically. No debates, no exceptions. This once. Because every exception strengthens emotional authority. Rules aren't restrictive, they're liberating. They free you from negotiating with fear, greed. Consistency as a psychological weapon. Most people think consistency is boring. Elites know consistency is deadly to chaos. When you act the same way regardless of outcome, emotion loses leverage. The market can't manipulate someone who doesn't react. That's why consistency is a psychological weapon. It protects your mind, it protects your capital, it protects your future self. Why boredom equals profitability. This is the final mental shift. If trading feels exciting, excitement means variability. Variability means emotion. Emotion means mistakes. Profitable trading feels repetitive, predictable, almost dull. Same setups, risk. Same routine, day after day. Boredom isn't a flaw. It's a signal that emotion is no longer in control. And when emotion is gone, execution becomes clean. Is how professionals survive long enough to win, not by intensity, not by obsession, but by discipline that outlasts emotion. And in the final section, everything you've learned will lock into a single framework, one that turns psychology into long-term, repeatable results. Everything up to this point has exposed the problem. Now comes the transformation. Because wealth isn't built by adding more information, it's built by unlearning what no longer serves you. The hardest part of trading isn't learning new strategies. It's removing scarcity thinking that was installed long before you ever opened a chart. Scarcity thinking says, I'm behind. If I miss this, I'm done. That mindset creates urgency. Urgency creates bad decisions. Wealth thinking does the opposite. Assumes opportunity is recurring. It trusts process over moments. It understands that missing one trade means nothing. The market will be here tomorrow, and the day after that. Once you internalize that, pressure dissolves. Unlearning scarcity thinking makes every trade feel like the one. Why people oversize. That's why they chase. Reprogramming starts with this truth. You don't need this trade to work. When you no longer need the outcome, you finally see clearly. Elite traders operate from abundance, not because they're rich, but because their process is repeatable. They know results come from volume of correct decisions, not intensity. Scarcity says, now or never. Wealth says, again and again. Building the delayed gratification muscle. Delayed gratification isn't a personality trait. It's a muscle, and most people have never trained it. Your brain wants rewards now. Markets pay later. So elites practice waiting on purpose. They let trades develop. They let equity grow slowly. They resist the urge to interfere, not because it's easy, but because it compounds. Every time you don't react, you strengthen control. Every time you let probability play out, you reinforce patience. It's how small edges become large outcomes. Rewiring risk tolerance. Most people confuse risk with danger. In trading, risk is defined exposure. Danger is emotional decision-making. Reprogramming your mind means learning to feel comfortable with planned loss. Loss doesn't mean failure. It means cost of business. Traders expect losses. They budget for them. They respect them. When loss stops feeling threatening, execution stabilizes. This is how risk tolerance is rewired, not by avoiding loss, but by experiencing it without panic. Long-term vision versus instant results. Instant results feel good. They also destroy consistency. Will thinking stretches time. It asks, what does this look like in 6 months, in a year, in 5 years? When your horizon expands, individual losses shrink. Term thinking magnifies emotion. Long-term thinking neutralizes it. That's why elites think in quarters and years, not days. They don't need today to be special. They need today to be correct. Identity-based mindset shift, this is the deepest layer. You don't change behavior first. You change identity. Instead of saying, I'm trying to be disciplined, you say, I'm someone who follows rules. Instead of, I hope this works, you say, I execute regardless of outcome. Identity drives action automatically. Once you see yourself as an operator, not a gambler, your choices change without force. Final reframe, here's the line that locks it all together. You don't chase money, you become someone money follows. Money flows to structure, to discipline, to emotional neutrality. It avoids chaos, it avoids desperation, it avoids ego. When you reprogram your mind this way, trading stops feeling like a battle. It becomes a craft. And once your mind is aligned with how money actually works, consistently, patiently, impersonally, results stop feeling forced. They become inevitable. And that's what real wealth looks like. Here's the uncomfortable truth most people won't admit, even after watching everything you just heard. Most will quit after this video. They don't understand it, not because it doesn't make sense, but because mindset work is uncomfortable. There's no shortcut here, no dopamine hit, no instant reward. Path demands something people avoid at all costs: personal responsibility. It's far easier to blame the market, the strategy, the broker, the timing. Excuses feel safe, growth feels threatening. Because growth forces you to confront habits you've protected for years. Discipline hurts at first. Routine feels restrictive. Silence feels boring. And boredom terrifies people addicted to stimulation. So most will return to what feels familiar: new strategies, new indicators, new hope. Not because it works, but because it feels productive without requiring change. This is why mindset work repels people. It removes the fantasy. It removes the victim story. It removes the illusion that success is external. And once those are gone, there's nowhere to hide. Now compare that to the pain of regret. Discipline is painful now, painful forever. One requires daily effort. The other arrives quietly years later, asking, what if you had stayed consistent? Elites understand this trade-off early. Choose the pain of discipline because it ends. They refuse the pain of regret because it compounds. That's why elites stay elite. Not because they're smarter, not because they're luckier, but because they're willing to do what most won't, long after motivation fades. Here's the direct challenge. This video made you uncomfortable. Good. Discomfort means something inside you is being questioned. If you felt resistance, good. Your old identity fighting for survival. If you're tempted to dismiss this and go back to searching for the next secret, ask yourself why. The truth is simple and brutal. Nothing here is complicated. It's just demanding. And that's why most will quit. They'll say this mindset stuff wasn't for them. They'll say they need more time, more capital, more confidence. But what they really need is commitment. So here's the final mirror. You don't need to agree with this video. You don't need to like it. You just need to decide, will you be one of the many who close this and stay the same, or one of the few who let it change how they operate? Because if this made you uncomfortable, it's working. You've stayed until this point, something has already changed. Not your strategy, not your indicators, your perspective. You now understand what most never will. The market isn't a place to prove intelligence. It's a place to execute discipline. You've seen why psychology beats strategy. Why emotions, not entries, destroy accounts. Why elites obsess over routines, neutrality, and boring consistency. You've learned that losses aren't enemies. They're data. That fear, greed, and ego don't disappear. They get managed. And most importantly, you've been forced to confront this truth. Trading success is an identity before it's an income. You don't try to trade better. You operate differently. You think in probabilities, not predictions. You value process over excitement. You choose discipline over comfort. That means you're no longer playing the same game as before. You think differently now. Not because you're special, but because you're aware. And awareness is irreversible. Here's the clear takeaway to lock this in: your job is not to win trades. Your job is to execute cleanly, repeatedly, and emotionally neutral. Do that long enough, and money becomes a byproduct, not the focus. That's the shift most people never make. Now, here's the ask. If this changed how you think, even slightly, support the work, the video. Subscribe to the channel. Share it with someone who's still stuck chasing strategies instead of mastering themselves. Not because of algorithms, because this mindset needs to reach people before frustration turns into regret. This channel isn't about hype. It's about building traders who last. And this is just the beginning. In the next videos, we'll break down how to build unshakable confidence without forcing it, or how to journal for psychological edge, not emotion, how to trade through drawdowns without losing identity, so stay connected. Because once you start operating at this level, there's no going back. You were never meant to chase money. You were meant to become the person who handles it. And that's why 90% will always struggle, while a quiet few compound in silence. Same tools, different mind. That's the real edge.